After many years of outperformance, Australia has become less attractive to investors. Let me explain why we think this is happening. Investment in Australia has fallen significantly when measured as a proportion of GDP from over 30% in the 1960s to a record low in the last couple of years. Most of the inbound investment into Australia is acquisitions, i.e. foreign companies buying Australian companies, and not capital investment into new projects or new initiatives. Meanwhile, large Australian businesses are now exporting capital. This chart shows the value of outbound M&A as a proportion of inbound M&A, and you can see outbound investment is almost twice the amount of capital coming in to buy businesses. Now, what economists would call low fixed capital formation is not a problem per se. You can see here that Australia, as the purple line, has declined, but it is still above where the US has been for most of the last 50 years, and indeed still above other major economies too. But you need the investment that is taking place to create real value, and one of the most telling data points for me is that the Australian Stock Exchange Index has declined compared to our economy's growth. In other words, the level of the stock exchange has not kept pace with our nation's strong economic growth. This is almost unthinkable. One reason for this is that the Australian Stock Exchange is heavily weighted towards mining and financial companies, and indeed other segments which you could describe as old economy. We can create tech unicorns in Australia, and this chart shows the small purple block down the bottom, about $50 billion of value, which is roughly in proportion to our economy's share of the world's GDP. But almost all of that value represents a single company. And very few of these tech companies list in Australia. As you can see here, almost all of the tech IPOs over the last decade have taken place either on US exchanges or on Chinese stock exchanges. Our nation's innovation track record is relatively weak. You can see Australia over on the right of this chart, well behind leading European nations or the USA. And government support for investment in R&D is low compared to other countries, many of which have increased their support over the last decade. As you can see here, the dark red bars are generally taller than the grey bars, reflecting that increase. So what is needed? There are three technology revolutions which imply huge opportunity lies ahead for those that are ready to seize it. The renewable energy revolution and the electrification of transport is creating dramatic new opportunities across the entire energy and transport value chain. The bioeconomy revolution, which means reforming the way that our food supply chains work and also using agriculture as a source for hydrocarbons in place of fossil fuels, is just beginning to open up. And of course, the robot revolution, the automation of decision making, is shifting where jobs take place and the nature of employment itself across every industry and every nation. Australia has shown that it can create world-leading technology companies, and we have here names like Atlassian and Canva in the modern era, and of course Cochlear and CSL some time before, that remain leaders in their fields to this day. But, and this is a large but, to succeed in these emerging industries, Australia will need to overcome the gravitational pull of much larger markets with deeper employment pools and faster moving capital. If we're to do this, True vision and determined collaborative action are essential. We need stronger policy support for renewable energy, amongst other things. We need national collaboration to help create a bioeconomy superhighway. And we must, as a nation, prioritize the creation of well-paid, rewarding jobs. For more on this important piece of research which we have recently completed for the Business Council of Australia, please visit pottinger.com/Australia.